Hello everyone, this is Crypto BitLaw back with another blockchain legal brief for you. And today we're going to cover how crypto miners are exempt from IRS reporting rules according to a new report from the US Treasury Department. So before we dive in, if you enjoy this content, please hit that like button, subscribe to our channel, and let us know what you think in the comments down below. And if you have any ideas or suggestions for any video topics you'd like for us to cover. So with that said, let's dive right on it. So as we can see here, Cointelegraph reports that crypto miners are exempt from IRS reporting rules, and the U.S. Treasury affirms this. The U.S. Treasury affirmed that crypto miners and wallet operators are exempt from the IRS reporting rules, preparing appropriate regulations. The cryptocurrency industry in the United States is about to score a major legal win as the United States Treasury Department plans to spare crypto miners and other, quote, ancillary parties from tax reporting rules. In a letter to a group of senators on Friday, the U.S. Treasury indicated that it plans to exempt crypto miners, stakers, and other market participants from rules that would require crypto brokers to share data on their clients' transactions with the Internal Revenue Service. Quote, appreciate the Treasury Department affirming that crypto miners, stakers, and those who sell hardware and software for wallets are not subject to tax reporting obligations, Senator Rob Portman said, announcing the news on Twitter. Here we can see a copy of the tweet, and this is also going to be linked down in the description below. In the letter, Treasury Assistant Secretary for Legislative Affairs, Jonathan Davidson, said that the department's position is that the ancillary parties who cannot get access to information that is useful to the IRS are not intended to be captured by the reporting requirements for brokers. Davidson also emphasized crypto validators are, quote, not likely to know whether a transaction is part of a sale, while entities involved in offering services related to hardware or software crypto wallets are not carrying out broker activities. The Treasury will also consider, quote, the extent to which other parties in the digital asset market, such as centralized exchanges and those often described as decentralized exchanges and peer-to-peer exchanges, should be treated as brokers, the letter notes. Bloomberg reported that the Treasury is planning to issue proposed regulations to include its stance on the broker definition. As previously reported, U.S. President Joe Biden signed the $1 trillion infrastructure bill in mid-November 2021, requiring crypto market participants to report all digital asset transactions worth more than $10,000 to the IRS. Several senators, including Pat Toomey, Ron Wyden, and Cynthia Lummis, subsequently urged the Treasury to clarify the definition of broker in the infrastructure law in December, planning to offer related legislation. A group of House Democrats also backed a similar initiative in November. So based on this, I think that it's good that we're finally starting to get some sort of regulatory clarity in terms of how miners and validators, or just anybody involved in keeping up a blockchain or validating new blocks, whether it be in a proof of stake or a proof of work consensus mechanism, are expected to handle tax reporting obligations. Now, I know that there was a whole bunch of issues surrounding how proof of stake validators were going to be taxed and how their proceeds from verifying blocks on the proof of stake networks and actually acting as validators in the proof of stake chains, how they were going to be taxed on that income or those proceeds. And it seems that this is just a further step along the line of ultimately coming to some sort of clear regulatory framework as for how these entities are going to be taxed. So based on this, we can tell that if you are a miner, if you will, or a validator in a proof of stake network, you would likely be exempt from that reporting rule according to the U.S. Treasury. It's the same thing goes for actual miners in a proof of work consensus schema like you would have with Bitcoin. So all in all, I think that this is good. We're going to probably end up seeing some more of this as these rules and regulations and all of these different departments come together to synthesize and produce frameworks and regulations that really spell out the requirements of all the parties involved in these spaces. So with that said, I hope you guys enjoyed this report. If you liked it, please hit that like button and subscribe to our channel. You can also follow us on Twitter. Our handle is @CryptoBitLaw. And with that said, thanks for watching, and we'll see you guys in the next video.